Good morning. It is June the 24th, 2016, and this truly is a momentous day. We have never seen market reactions like we saw today, even 1987. Looking at Europe collectively is off 18% plus. Asia is off 12% plus. The E-mini, when I took the numbers this morning, was off 80 points. Bond, we closed yesterday at 66.03, currently trading at 71.12, 5 points higher. The note closed at 30.26, last trade 33 even. I mean, these are big times, and these are big markets. And if you don't have a lot of money in your account, you can't handle the volatility. While the opportunity is going to be fabulous today, the risk is going to be much higher. And if you back losing positions, if you're hesitant to get in and get out, today's not the day to play. Central bankers, politicians, major players will all be picking up the mic at some time today. First thing out of the mouth was that, hey, no big deal. They're going to try to calm the markets. The central bankers have already talked in terms of putting some $500 billion of liquidity in Europe into their banking system. We'll probably hear the same in the United States, and they'll do it. They've got to maintain liquidity. And then there'll be talk about what happens next. When Ireland voted not to proceed with the EU and the rest of it, and it was a very close vote, they managed to engineer a second vote with Ireland staying in the EU. So it'll be hard to see, but the market will be subject to news spikes randomly. If you're on the right side, you'll be grinning from ear to ear. If you're on the wrong side, you won't like it too much. So you have to really assess your capabilities given the potential volatility, etc., that we face today. So the name of the game in trading is capital preservation. You have to be able to play the next day. Now, my guess is the high is in. And what happens in the overnight session is that the markets go far enough where there just absolutely aren't any buyers or sellers. And depending on which way the market is moved, and you only have one side of the market there. So last night we stopped at 34. 6.5. We're at 33 basically right now. So this 33.16 area right here, top of value, might be pretty good resistance. And you can see we have a high at 12.5, a high at 14.5, high at 15.5, and then we had the spill at 18.5. So this 12 to 18 area is probably pretty solid resistance as the market starts out. The second level of resistance after that would probably be in the 28 area to the buck. As far as support goes, we have this high over here at 22.5. There will be resting limit buy orders at 23.5 to 25, leaning against that high over there. That would be a structural play. So we'll keep that number in mind. And you can see right here that the market stopped at 25.5. So we have this breakout from 16. So 16 to 24 is probably pretty good support. And they might take it a little bit below 22. To spook the length and to make those people suffer and feel a little bit of pain that are buying against it. But 22.5 was that high, and the market stopped at 25.5, 30 seconds above that. So obviously the buy side is the side to play on today. The big negative for that would be massive Fed intervention in our equity markets today. So our first buy this morning is going to be in the 24 to 28 area, and 430 seconds might not be enough. I mean, this is our second buy is going to be 12 to 16. On the sell side, 8 to 12. Sell one, really not too interested in the sell side of the market. and then 20 to 24, and we will see how it unfolds and opens up. Today we do have some news. Durable orders at -0.7. Ex-auto, ex-transportation, excuse me, unchanged. Consumer sentiment 94. That could come in lower than forecast. I don't think anybody's too excited about what's going on. And then Baker Hughes probably could be higher. For North America, it was at 493 last week. I'd look for that number to be a little bit higher, but the focus will be what the E-mini is doing. And if news does play today, durable orders, ex-transportation. I doubt if news will really play all that much today. God, as volatile as the bond is, who knows, right? How will we play the bond today? You know, it's interesting. I've never seen a day. We had 1.8 million contracts traded overnight in the note. 1.6 million traded in the E-mini. This will be a record-breaking day for all exchanges. And I've cut my screens down. A lot of the screens that we look at intraday we're not going to be able to look at today. I just went to a few number of charts as I figured we could get by on. And last night I could not get a command in as I was cutting my charts down and knowing what was coming today. So right here you can see we're currently at 71.09 and the last rotate up was at 72.11. That's a point away. We've got a dent right here at 25. We're at 8. So we got this high right here at 13. So I would say 16 to 24, 1. 172 to 172.08, sell 1. 172.16, 172.24, sell 2. Last rotate down stopped at 70.29. Then we got this 27. I'm in 2-point increments, so this won't be as accurate. So 28 to 20 will be 1. 8. Oh, let's make it 16 to 8 will be buy 1. And then 69.28 to 69.20 will be buy 2. And this is we're just going to have to let it unfold. I mean, it's just there hadn't been a day like this ever. Gold, what a ride they had last night. And again, you know, based on the polls and the rest of it, it would have been hard to envision what happened. But in fact, Neil Lafarge threw in the towel and then he took it back last night. So when we talk about the 4 stages of market development, you got a new move. Number 2, you find a price that is cut off the buying, so 1350 cut off the buying. Remember, Bank of America said 1350 to 1550 is where gold was headed. So this would be stage 1, stage 2, and now we're in stage 3, development. And we're looking for a move to come out of this 1320 area. Top of values 36, so 35, 40, sell 1. Pick up this area, and then 50 to 55, sell 2. Not really too interested in the short side of the market unless the E-mini explodes and rallies up. And that could. The Fed could come up and just buy everything that's out there, and you have to feel that they're thinking that way. Let the first flush of selling get out of the way. Everybody dumps on the opening 30 to 45 minutes later, which is the way the plunge protection team used to work. Come in and buy everything up that you can get your hands on. So we'll have to be aware of that. 15 to 20, buy 1. And then the buck to 5, buy 2. I mean, it's just, your guess is probably as good as mine. Talk about selling. The euro went from 114 plus to 111 minus last night, and got down to 109.50, and I think the and these are nickel increments. The high 114.50 last night, so everybody kind of thought that was what was going to happen, and it didn't. So stage 2, new move 1. We found a price that cut off the selling, 109.75. We've got 111, looks like 10 to 20. So we're currently got 850. I mean, it's really hard to read these. So they're in half-penny increments. So basically 110, give or take, sell 1. And then we have this area right up here, 111. So we'll just make it these are 50-cent increments. That's pretty solid. 111 will be sell 2. I mean, for want of a better place. On the buy side, 108, buy 1. And then 110.50, buy 2. And we have this high volume number right up here at say at 111.50. So maybe a 10. I don't know. It's just, who knows. We'll let Nancy. We'll go back and have Nancy bring out her silver crystal ball and. Okay, crude got whacked. The 47 level was at 46.47 as support. And here we are at 47. You can see that we're going to have trouble at 48.50. So 48.50 to 48.75, sell 1. 49 and a quarter, sell 2. On the buy side, 47 even. I'll make it 47.50 buy 47 and a quarter, 47.50 buy 1. 46.50, 46.75 buy 2. I think the short side is the side to be on, but again, looking at hard to say what. I think the plunge protection team has to be there today, but do they play on the opening and just catch everybody on the wrong side and rally the market to show that you can't sell it with impunity? If I were an institution, that's what I would hope the Fed would do, so I could dump or they let that flush come, which is what they used to do in the old days. Let the market wash out, then step up to the plate. So 2030 is going to be probably a pretty important number for us on the E-mini. That's where the break has been, that 25 to 30 area. And you can see people are starting to cover up. So we've got this chart low over here at 41. We've got the European high there at 43. We've got the spill basically from 50. So 40 to 45, sell 1. 50 to 55, sell 2. On the buy side, low volume number down here is 20. So 15 to 20, buy 1. Don't really like the long side. And again, 2000 to 05, buy 2. Durable orders, minus 0.7. Ex-transportation, unchanged. Consumer sentiment can come in lower than forecast at 94, as can durable orders. And Baker Hughes, I imagine, is going to be higher. It was 493. Yeah, it's going to take a while to get everything up and posted, so I'm going to get busy on that. And these are momentous times, and this is a great learning experience. No one's ever seen a day like this, ever. The history will be written today. So news algos will have the jump on everybody. You can't compete with them. And we're going to be subject to news spikes all day long as various people pick up the mic and talk about what comes next, etc. So I'm going to get busy on what I need to do, and I'll be back with you as soon as possible.